Welcome back. You're watching Stockwatch with me, Juliette Televi, and joining me to take your stock-related questions this evening are Ricus Reeders from PSG Hole-in-One Ruimsig and Wayne McCurrie from FNB Wealth Investments. If you'd like to send questions, please SMS 41392 or email stockwatch@bdtv.co.za. Wayne, Ricus, good evening to you both. Ricus, I shall start with you tonight. Good day on the market today. And the Rand doing pretty well, and US inflation coming in, well, let's put it this way, not worse than expected, and a slight dip month on month. And was that reason enough for all US markets to go crazy? Good enough for you?
Yeah, it's obviously good enough for the market, but it's getting a bit ridiculous if you take a look at the numbers coming out of America. I mean, first of all, that inflation number is still up and it's cumulative, so there's no relief yet. But we're passing, shall we say, the rounded figures, whether it be 0.1 or 0.2. I mean, we're going into third or fourth decimal places on these numbers, yet the market reacts to it. So it's just looking for a reason to go up. Now, I'm not complaining because that's the business we're in, is buying into stuff that's going up. But I think, a better than expected inflation number, retail sales slowing a little bit down, and that in combination with a number of other data points over the past week or two that shows some kind of slowdown in the US economy is obviously putting the buying mode back into the market.
Yeah. Wayne, are you a bit concerned about the valuations of the US market? And there's actually a question from a viewer, which maybe I should get to now. So he says, we'll answer his question, but he says, I've shifted a large percentage of my portfolio to quality South African stocks, China, Baidu, JD type of shares, emerging market ETFs like India, and I've reduced US tech. Is this the right thinking in 2024 in the medium term? And just maybe starting on my question on whether US shares are actually becoming overheated now.
Look, I don't think the shares market's overheated. You never get a major correction in hopefully a falling interest rate cycle. It's never happened. But the market, it cannot continue going up at this pace. And it might go down 10, 15%, who knows? That would actually be quite normal. It wouldn't be abnormal at all. I don't know about going into India. I'm a little bit cautious about emerging markets. India might be where China was 20 years ago, but there were plenty of ups and downs, along the way. To take some profits on US tech, I don't think that's a bad idea at all. If you've been there for a while, you've made a lot of money. So why not take some profits? But if we look at it in perspective, we are hopefully in an interest rate falling environment, which I've spoken about. The US economy is doing well. The companies aren't overgeared, so the higher interest rates didn't kill them, and they're making profits. I don't think it can carry on going up like it has, but the chances of a major correction, I really don't think so.
Okay. And Ricus, your thoughts on sort of a portfolio rotation at this stage? Would you agree with what this view has done, or would you have anything else to add there?
No, and I'm talking my own book here because, as Wayne said, I don't think it's a bad idea to move some of the money that you've made in tech stocks, hopefully, and disperse it in other areas of the US market, whether it be consumer orientated or energy, for example, or even stuff like construction/manufacturing. It's what I've been doing, and just on the basis that you're sitting with very pricey stuff on the tech side, and if you dig down into the Russell 2000 set of companies, there's some real bargains in that sector that's been left behind.
Yeah. A question, because we saw a graph flash up, showing the Rand. It's broken 18.30 to the dollar, 18.29 at last count. Wayne, do you think this is, or 18.27? Oh, okay, so this is a pretty good showing for the currency in light of the NHI bill, which was signed into law today, which is a fairly disastrous piece of legislation, potentially. What do you make of what the Rand is doing at the moment? And is that purely linked to the inflation numbers that came out of the States? Do you think this could continue for quite a while?
it's linked hopefully to the commodity cycle. This is a commodity currency. It gets influenced shorter term, and when I say shorter term, 1 year, 2 year, 3 years, by domestic events, but fundamentally it's driven by the global economic stroke commodity cycle. Now we're in a down cycle at the moment, as we all know. You can look at the commodity share prices, but hopefully we are now entering a falling interest rate environment. I mean, this is a stuck record on my behalf, and that should be good for commodities. It should be good for the rand. It should be good for our commodity shares. And fair value for the rand is still probably below 17. So if it is what I think it is, we should have the next 2 to 3 years see the rand go below 17 and an extremely good return from our commodity shares in particular. So yeah, I think the rand's going to continue. I mean, the rand is a little bit stronger than where it was a year ago. And it's been hovering between, let's call it the 18 and the 19 now for, just having a quick look here, let's call it 2 years. And I think the strength is going to continue with bumps along the way, but it's a cycle story. It's a 2 to 3 year story.
Yeah. Ricus, so if you were going to buy some of those Russell 2000 shares, for example, shares outside of the US tech stocks, would you take money offshore now? Might you wait a bit? Or would you buy the shares regardless of what the currency is doing?
Yeah, I tend to try not to finesse currency moves too much, except, obviously when there's an event and you get an eventful rand move, then it's a good time not to panic or not to be too enthusiastic. But as Wayne has said, this rand has moved between about 19 Rand 50 to the dollar and about 17 Rand 50 for the past 2 years. There's your range, and it's no use trying to play the currency while you're missing out on an opportunity offshore. Your longer term trend in the rand is still weaker, and as Wayne said, it's going to oscillate according to the commodity cycle, but in broader term, that weakening trend hasn't all of a sudden stopped, and we're now going to get remarkably firmer.
Yeah.
To do that would need an event, an unexpected event.
Yeah. Okay. When you talk about commodities in a down cycle, but there are a couple of commodities in an up cycle, and one of those is copper, which is one of the reasons why BHP's made this pitch that it has for Anglo American. Just maybe on the copper price, I think, is it up 40% in 2 months? Is that possible, that it's really that hard? So someone sent me a chart this morning saying this is going to end in tears. Firstly, I wonder what you make of that. And then secondly, it relates to the question a viewer has sent, who says, I've been looking at copper 360. It seems to be quite an attractive investment case. Would it be a good possible long-term investment idea? So Wayne, just firstly on the copper price, is this, because that's quite an exponential spike in the price.
Yes, it's had a very, very strong run. I'm just having a look here quickly. It's had an incredibly strong run. And it's more or less near the peaks of where it was, but it's done it so quickly. So in other words, maybe copper is just the first commodity to run in the anticipation of falling interest rates. I mean, iron ore hasn't run yet. Platinum, palladium certainly hasn't run yet. Oil hasn't run yet. So maybe copper is just the first one to run. But it's done a seriously large run. I mean, literally up 30% in 6 months,
do you think that it's going to end in tears, or that could stay?
No. Let me revise that. Yes, it is going to end in tears. All commodity cycles end in tears. Every last one. They all end in tears. But the tears might not be 2 weeks away. The tears might be 3 to 5 years away. Because the cycle, it's a cycle. And we've been in the down cycle now for, 1.5, 2 years. So maybe the up cycle lasts 1.5, 2 years. But all commodity cycles end in tears.
Ricus, if you would you add to copper exposure, and specifically, would you look at something like Copper 360, which is, I suppose, in its nascence as a company, it is a pretty speculative option.
Well, it's new. I won't say it's speculative. I think they've got proven reserves. They've just managed to acquire another plant, so production is ramping up. New products or projects of that type of capital nature, mining project, there's normally a hassle somewhere and a breakdown somewhere and an unexpected cost somewhere. So be prepared for volatility. But I think as a sustainable operation, as long as obviously the copper price plays in their favor, I don't think it's a bad option as a speculative investment. You know, you can't treat it the same like you would Billiton, for example, but so far so good as operationally as far as I can see.
I mean, Wayne, I think you've said before that be careful of all the hyperbolic SEN statements issued by players like Copper 360 or Orion.
Yeah.
You know, they do try and amp up the hype, and I can see why they do that, because you want interests in you know, you want to support your stock, especially if you might have to raise capital down the line. Would you be keen on an Anglo, especially in light of the assets that it owns?
Yeah.
Yeah.
Anglos is now a copper play, so you might as well buy Anglos.
Would you buy De Beers? Because you know, yesterday we had the news that Anglo's is going to sort of precipitate its restructuring, and De Beers is going to be spun off or sold. We don't quite know yet what the exact plan is. If it came to the market, would you want it?
Yeah, the diamond market has changed. It's not nearly what it used to be. There's a whole bunch of factors over the years, cutting and polishing in India, Argyle in Australia. They're still selling diamonds, but the biggest threat here are these industrial diamonds. They're not cubic zirconias, and that these are proper diamonds, and they can do it cheaper than what De Beers is selling for. And the industry, the natural diamond industry, has got to reprice their product down to the synthetic diamonds to compete, because you cannot tell the difference. These are proper diamonds and not artificial diamonds. They're just not produced naturally. And you know, when it comes to diamonds, big and cheap is all that counts. You're not worried whether it's artificial or a natural diamond. So I wouldn't buy De Beers. And when you think that De Beers, Anglo-American, started with De Beers, has been with De Beers for, I don't know, 130 years odd, and they're unbundling it because they don't think it's that great.
Ricus, there is a follow-on question to this, and that is from a viewer who says, can you name 3 South African companies that could be the targets of a takeover? So 3 other South African companies, not necessarily mining firms. The viewers listed Old Mutual, Amplats, and then a question mark. Is anything... Firstly, do you think Amplats is a takeover target if it is unbundled? And secondly, what other company would you add to that list, if any?
I don't know. I would like to know what Wayne thinks, but as a standalone, considering Amplat's reserves, possibly. I think the platinum sector is unnecessarily in the doldrums. So yeah, but certainly our industrial market is littered with companies which are trading well below book value. I think we were talking between the break about Mustang, for example. I think the viewer asked that question as well, which is probably, I mean, more than 2/3 below book value. So it's that kind of company that is interesting, and it's not new news. I mean, if we've just taken a look what has been bought over the past 2-3 years, if you pick your company and you're prepared to wait, there's a big possibility that could happen.
Do you think Old Mutual's a takeover target? I wouldn't have thought that it was an obvious one.
I agree with Ricus. There are lots of truly undervalued companies in South Africa. The banks are cheap, so that some of the life assurers are cheap. The industrials are looking good. Other than Shoprite, the retailers look very cheap. Mr. Price, Spar. So there are plenty of takeover targets here. But in the bigger scheme of things, these are relatively small companies.
Also, the question is begged. It presupposes that you have international investors, say, who want to be here because probably the competition authorities would look askance at a Sanlam taking over an Old Mutual. I cannot ever see that happening. So
no, that won't happen.
So you would have to have a big enough company to take over, say, an Old Mutual, and it would only be big enough if it were a company from abroad, and that would assume that they'd look at South Africa as a growth prospect, which I'm not sure many companies are actually doing at the moment. Or am I being unnecessarily bearish?
No one's looking at South Africa at the moment because everything's in the doldrums. You know, people only start pouncing on us to buy us when we're in the good cycle. If things are just going swimmingly, you can notice how when all the overseas banks and stockbrokers came in here, they didn't come in at the bottom, they came in at the top. And they subsequently left at the bottom.
Yeah. And in fact, I think it was you, Ricus, who said a couple of months ago that if you don't have growth, all you have is risk. Would you maintain that stance?
Yes, unfortunately.
Okay.
You could, sorry to interrupt, an overseas investor could come here, overseas whatever, come here with $200 billion and could literally buy every quality company, almost domestic company in our market.
Yeah, I know. It's a sobering thought. Ricus, you mentioned Mustek. So the question from a viewer was, I have a question to the panel about Mustek. It's the IT company. Given that the revenue growth that they've seen over the past few years seems to have stalled out a bit, could this be indicative that they may have reached a ceiling? Furthermore, how detrimental would the decrease in load shedding be to their battery and solar panel earnings? Ricus.
No, that was an interesting...
Excuse me.
That was an interesting question. I think their revenue growth slowed because they were overstocked on some of their products. So hopefully they're getting that out of the pipeline. But they're still not, I think, in a great market as far as the computers and peripherals are concerned. And I think not only Mustek, but everybody else that's been heavily investing in the supply of alternative energy products, whether it be solar panels or inverters, possibly they're going to sit in the same situation where they've maybe got too many things on the shelves and there's been a severe drop in the prices of those specific products. So they might sell it, but the margins are going to get hurt.
It's actually been quite a sobering performance by Mustek shares over the last year. It's they've more than halved, which is distressing to see.
Yeah, look, I mean, a lot. You listen to all the companies that are associated with the alternative power. They had a corker year last year, absolute cracker, and now they're overstocked and it's not moving anymore. Because number one, people have bought, and number two, the load shedding is less. I mean, load shedding is coming back. But it probably won't come back to the same violent extent, mainly because we've all put up the solar panels.
Yeah.
And all the companies have put up the solar panels.
I mean, that sort of, okay, so Mustek itself, I don't know if either of you would be prepared to take a punt on it, or if it's just, the question itself on Mustek, is the market telling you that you don't really want to go here, or is it actually... at a price where you might want to venture?
The earnings are down sharply, So, I mean, even though historically it's a 3 price earnings ratio, the earnings can be down sharply again. Look, this is a very small company. Anyone who wants to put money in here, you can try it out. I mean, it might be a fantastic share. It could bounce enormously from this level. But this is not where you put a lot of money in.
Okay. And the broader question, Wayne and Ricus, the companies that have benefited from alternative energy supplies, companies like Reunert, I think Udeco got in on the business, are they now, are they not going to see the fruits of that? Or in fact, are we actually in an environment where we want to save energy, so you are going to be adding more alternative or solar panel solutions? So because the cost of Eskom supplied power is still very high, and you might actually see companies going for solar solutions anyway, just to cut their electricity bills.
Yeah, look, for Joe Public, I don't think we're quite there yet, but we're getting there rapidly. But for any company at shopping center, especially shopping centres, not so much office blocks because they tend to go up in the sky and not have much roof space, but shopping centres don't go up 20 stories, and they've got lots of roof space, and they've got big parking yards where they can put up the solar panels. It's an economic decision now. It's not even the load shedding decision. You can actually generate your own electricity cheaper. So there will be demand, but there won't be this frantic demand. I mean, I can remember Voltex, which I think is part of Bidvest. You couldn't even walk into the reception area because the solar panels were stocked from the roof to the ceiling in the reception area where they're supposed to serve you. Not even in the storeroom or the warehouse. In the reception areas, the solar panels were stocked to the roof. Those days are gone.
Yeah. Ricus, your feelings on these companies? Would you still look at them, the Reunerts and Hudecos of the world, and the Bidvest, for that matter?
It's only part of their business. So, as Wayne said, obviously business was good last year, possibly not that good going forward, but it's still essential. Eskom is not going to be solved overnight. And I think people have seen the benefit of not being totally reliant on one supplier of energy, specifically concerning the governance issues they've had and possibly will have in future. It's nice to be independent. So going forward, I don't see a problem. As you know, where alternative energy is not a sustainable business, except you're not going to have those huge margins and huge volumes that we've had over the past year or two.
Okay, one last question before I get to stock picks. A viewer says, what would be a good long-term investment if you have a choice between Exxaro and Kumba Iron Ore? Exxaro has coal, other metals, while Kumba has iron ore. Kumba also pays high dividends twice a year, which is attractive to an investor. What's the view of the panel? Exxaro also pays pretty high dividends. Ricus, sticking with you, is there an obvious pick between the two?
Gosh, not really. They're single commodity stocks. They're both local. They both have transport problems as far as getting the stuff to harbour is concerned. I think possibly Kumba a little bit more specialised as far as the metallurgical coal is concerned. So, what am I talking about? Exxaro, I mean. So I would tend to go for Kumba.
Okay, Wayne?
Yeah, look, these are not good long-term investments. These are terrible shares longer term. They're subject to so much cyclicality. When you get it right, you look like an absolute king. When Kumba goes from 25 Rand to 800 Rand, you look like a king, but then it promptly goes back down again, as we all know. And they only pay out high dividends when they're making money. They've skipped dividends a good few times. So if that was the only choice I had, I'd buy Kumba.
Okay, but you have other choices, which leads us to your stock pick. So Wayne, I shall stick with you. What takes your fancy?
Yeah, I'm going with Naspers. I mean, I know the share price has run hard in the last while, but I think this is just the start of tech recovery in China. So this is all Tencent again. I think the Tencent share price, the results came out yesterday. They were good. I think this is just the start of the some sort of recovery of China tech. When you look at how US tech has run, I think it's the start. So I'd go for Naspers, despite the fact that it's run very strongly in the last while.
Yeah, we actually had a viewer on Monday night asking whether or not, and he'd made more, 100% on Monday, he's made more than that by now, asking whether he should cash in or stay long, and the advice was to stay long. Ricus, what about you?
I had Robex a few weeks ago, and my idea there was that if I'm wrong and I'm too skeptical about where our economy is going, Robex is a company that might do well. In the same line, I'm doing Nedbank at the moment. From all the banks, who are all cheap, historically, Nedbank has probably got the riskiest loans. So if we, as a country, do better than expected, your gearing on Nedbank, as far as the provisions are concerned, is going to have the biggest financial effect. And I would expect that to outperform other banks.
And what do you make of the recent recovery, actually, in all the banking shares? Because they had a really dodgy April, but things are getting a lot better.
I think the market is trying to tell you something, both about the outcome of the election, about what Wayne says the biggest determinant in our market is commodity prices, both for the currency and our market in general. So even though we feel pessimistic, market is telling you something else.
Yeah, I mean, the banking shares a couple of weeks ago were just too cheap.
Yeah. Okay. Well, good to see the recovery already in Nedbank share price. Gentlemen, we shall leave it there. Thank you very much for joining this evening. Nice to chat to you both. Ricus Reeders is from PSG Holland 1 Ruimsig, and Wayne McCurrie is from FNB Wealth Investments. And up next we have the close. Stay with us.